is incredible uncertainty right now, and if there were any question that anyone had in their mind about the economic impact of uncertainty, you can see it with full force. We've seen the pound fall very significantly. You've seen, at least in the short run, a sharp decline in equity markets, and then people have been running for safe havens. They've been running to the US dollar, running to US Treasury. We're now at record low yields for the 10-year. All of this is a consequence of not knowing what's going to happen next. It's very interesting to see the difference in the stock performance in the UK between the larger firms, which tend to be more export-oriented, and the smaller firms, which tend to be more domestic. The larger export-oriented firms seem to be benefiting from the pound's decline, and so you see a rise in their share prices. If you just look at the primarily domestic firms, they've been hurt by this because of the uncertainty and not clear what's going to happen next. So there's a very big difference in the impact of the lower pound on those that are able to export, and so that really helps them out, and those that are more domestic, where there's just going to be more chaos. The key to the long-run impact is really going to be the policy changes within the UK, as well as the relationship with the EU and the rest of the world. If they respond to this by dramatically changing domestic policy to make it much more business-friendly, perhaps London and England could become the low-tax haven in Europe, that can be extremely helpful. And so if they can change to have much more business-friendly policies, much more pro-growth policies, that's potentially helpful to them. But this uncertainty is certainly not going to be helpful in the intermediate run. So a lot of the long-run impact will hinge on the policy choices made domestically, as well as the policy choices for the interaction between the UK, or what's ever left of the UK, and the European Union and the US. Ireland is the fastest growing country in the European Union and one of the fastest growing countries in the world, save a country like India. And one of the reasons for that is because they've had a really pro-business focus, and they have gotten their fiscal house into order. It wasn't in order after the financial crisis. So a country that can get its fiscal house in order, can get its regulatory policy in order, can be helped. If we think about the competition in Europe of, well, where are companies from London going to go? Where will the financial services firms go? I think they'll largely stay in London, but they also will need to have operations within the European Union itself. The key question about the long-run impact will be on what does it mean for the European Union as a whole. Does this mean that we're going to start to get populist movements in a whole variety of countries, and you'll get these close votes that suddenly go for exit and basically see the pieces of Europe come apart? Or will people look to the UK and say, my gosh, look at the chaos that's there, that's not what we want? Policymakers have focused on the big picture benefits of globalization and trade, and not as much on the different communities that can be harmed by this. You can make a strong case that everyone can gain. In practice, not everyone does, but there are mechanisms to try to provide more support, trade adjustment assistance, other types of assistance, retraining that can help people to move from one area to another, or to get the skills that they may be needed in a more competitive environment. But thinking creatively about how we make sure that everyone can participate in the benefits of globalization, rather than just saying, "Oh well, we're all better off," and yeah, well maybe some people didn't make it, but they'll take care of it on their own. It may not be so easy for them to take care of it on their own, and also you start to see this populism rising up, both in the U.S. as well as in other countries, and so political actors need to be mindful of that if they want to maintain the benefits of open economies, of open capital markets, of free trade.